I'm sure you will have heard, seen, and perhaps participated in a lot of dialogue around this over the last 18 months. My name's Jeremy Milton. I'm the commercial leader at Mercer DCM Financial Wellness. And our session today, myself and my colleague Eve, who will introduce herself, are going to give you a little bit of background about what we're seeing in the marketplace, some of the emerging trends. One thing that is clear, there is no one-size-fits-all as far as financial well-being is concerned. And then we're going to allow a little bit of time for a Q&A, and if we can within the room, just break out into quarters and discuss a couple of questions as a group and just feedback maybe some observations, some experiences from the floor to again share that amongst the group today. So I'll hand over to Eve, who's going to take the first part of the session.
Hi everybody, my name's Eve Reid. I am the head of proposition at Mercer. I don't know where to put my papers without conflicting the two mics, but hopefully that will work. So there are a few things we're going to cover today. Firstly, we are going to, spoiler alert, we're going to tell you why we don't think you can ignore financial wellness. Secondly, we're going to give you some insights into what some of our clients are doing. And then thirdly, we're going to help you think about, if you want to do something in the area of financial wellness, how you make sure it has an impact through using data and technology. So firstly, what's happening in the UK market? So we are seeing a number of different trends which are having an impact on financial wellness and also on your employees. So the external environment, economic uncertainty, I'm sure you will all agree that that's something we've been facing for many years now, but specifically real wages have decreased since 2007. Interest rates, having just risen slightly, are still at close to zero, and that is pushing up consumer debt. The workforce crisis, so you may not yet recognise this, but we are seeing in some industries skills shortages. Migration has, for the last 4 or 5 years, masked a decreasing UK-born working population. If migration is if a limit is put upon migration, it's likely that we will see not enough workers within the UK, and that will have an impact on, of course, GDP, productivity, and all of those sorts of things. Workforce benefits. The realignment of benefits. So what we mean by that is lots of organisations are considering how they best... how they best structure their benefits in the whole. So thinking about pensions, thinking about other things they might bring into the benefits structure. Financial wellness is a part of that. We are seeing a lot of activity in the market, so lots of new providers, lots of new products available for your employees through you as an employer. And then finally, thinking about how we communicate with our employees. So where we are today in 2017, we have access to lots of data. Technology has got us to a place where we can actually personalise what we send to people and think through how we can really communicate and have an impact on them as an individual. So financial wellbeing, what is it? This is our definition, Mercer's definition of financial wellness. This started off, the original definition, which we took this from, was created by the Consumer Financial Protection Bureau, and I hope I've got all the words in the right order there, who are a US governmental organisation. They did lots of research into financial wellness and what it might mean. Come on in, it's okay. And we've created this 4-pillar approach. So we've really thought about how we can move outside of not just pensions and some other benefits into thinking more broadly about how we meet the financial needs of an individual who works within your organisation. The 4-pillar approach is thinking about financial health from the perspective of an individual. Control over the day-to-day and month-to-month expenses is the first element of that. Do people understand what they've got coming in, going out, when money needs to be in a certain account, etc.? Secondly, are they prepared for the unexpected? So at lower income groups, this is particularly important because it's not necessarily possible to meet an unexpected expense through the normal monthly income. So for example, you sit on your glasses. They are important for you. You can't work without them. But actually the £300 to replace those, is that necessarily very easy for you to find? And if it isn't, what do you do instead? Do you go and put a new pair of glasses on credit cards? Do you borrow from friends and family? Do you look at payday lenders? Thirdly, having the confidence to take action. UK financial literacy is at a pretty low standard. We don't do much in terms of educating within schools. We don't really talk about money that much within the family home. And people are leaving university, study, going into work, not knowing how to manage their finances. Actually, you as employers could have an influence over how well people approach their money. And then fourthly, being on track to meet future plans. First question is always here, do they have a plan? Do they know they need a financial plan? It's not just about pensions, perhaps it's about other priorities for individual. It might be about buying their first home. It might be about clearing down debt, whether that be unsecured debt or student debt, for example. There's lots of different elements of a financial healthy person, and we can help people to have control over all four of those things. So what is the reality of what employees and individuals are facing? What are people worried about? Paying their day-to-day finances, saving enough for retirement, being prepared for the unexpected, and repaying debt. If we were to survey your workforce, how do you think they would line up against those statistics? I think you'd be surprised how many people in high income groups were struggling with debt, for example. We've seen that evidence in a number of organisations. And the realities of that on a day-to-day basis are that people are just about managing, a term that the government have coined, but it is a reality for lots of people in the UK at this point in time. 39% expect to work beyond their favoured retirement age. I think actually, as we get closer to that, that number will be much larger, and it's actually quite low, really, I think, considering the reality of what most of us are facing. 17 million workers have less than £100 in saving. This is the one that always shocks me. That's 54% of the working population don't have £100. So when they do break their glasses, the reality is they do need to look at other lending sources, which might not be that favourable to their longer-term finances. And then a quarter of people rely on credit cards to get by. Now, I suspect there's a proportion of people in there who are actually using them actively to manage their money and build up points, etc. But there will still be quite a lot of people who are relying on credit cards to make their ends meet. So what we're seeing in terms of how employers and organisations are approaching financial wellness is twofold. So we are seeing some organisations sit back, consider what they've got, take a very strategic approach, think holistically about all of the things that they could do, look at trends, look at the full marketplace, use advisors like us who understand the market very well to design a new benefits package that works specifically for their workforce. Other organisations are choosing to be a bit more tactical. Some of those might be part of a longer strategic plan and just the first step or two on that. But lots are choosing to put in between 1 and 3 tactical interventions, as we call them, financial wellness, whether it be a new benefit or a salary deducted loan or something along those lines, for example. We are, in some circumstances, they will be addressing a specific concern, but a lot of the time they will just be reacting to what they see in the marketplace and what they're hearing about product-wise. And taking that one step further, some of the specific things we're seeing people do is, as I say, the tactical 1 or 2 point solution approach. Addressing employee debt problems, I'm sure you'll have heard of this market already, but payroll deducted loans is a very popular area employers are looking at. We have seen a transition from those who are looking domestically at what they can do in terms of financial wellness to, for those organisations where it's relevant, taking a global approach. So sitting back and going, okay, what could we do in the UK? And then as they start to talk to counterparts in other countries, actually they realise there's quite a lot of similarities between countries about what people are struggling with. And does it make sense to take a global approach, use say, the 4-pillared framework, and apply different domestic solutions. Workplace ISAs is a very popular area. Lots of companies have had them in place for some time, but actually they're not necessarily delivering good engagement at this point in time. So you might get 2, 3, 4% of your population actually looking and using them. What can we do to drive better engagement there? And Jeremy will share some specifics around some of our client insight into that in a moment. As part of the ISA evaluation, we're also looking at pensions and whether there's anything else you want to put alongside pensions to actually deliver better for your employees. Many organisations are starting to think about how they apply behavioural science, the learnings of that. Again, Jeremy will give you some more information. And they are thinking about the needs of their employees, not just making assumptions based on what they think they know about their employee group. And then finally, we are seeing an increased demand for a strategic approach rather than a tactical solution.
Thanks, Eve. What I'm going to look at now is a specific, just linking back to the point around, I guess, an area we're seeing increasing demand from clients, or certainly increasing interest, and we've had, let's call them early adopters for organisations who have actually started to challenge, for us all, probably what is the key financial wellness benefit that we already provide for our employees, which is our pension. And I'm using the word pension deliberately rather than retirement, because as we all know, and as Eve alluded to, the changing workforce patterns, the age at which people are likely to retire is going in one direction. And I think one of the other key pieces, if you look back about how jobs for life have changed, the mobility of our workforce now, a retirement plan or a pension plan, and maybe this is the point we want to put to you as we are to other clients, in some ways may no longer be quite as fit for purpose as it was in the past. Now, in an ideal world, everyone has a large pension, they early retire at 55, 60, and they sail off into the sunset for permanent retirement. But accepting that since the advent of pensions freedoms in 2015, that whole kind of premise has been turned on its head. And as you may have seen from the way some of your employees or members have reacted, they feel that kind of Christmas has come a little early in terms of some early cashing out of pension rights. And this links back to perhaps what is really the underlying needs amongst workforce. So the concept that we're looking at is something we call redirection, where, and I appreciate this is a simplified model and you need to take a couple of assumptions on this, but rather than funding everything into a traditional plan, for most of us that's DC these days, what the employer does is allow the employee to take some control over part of that traditional retirement savings. So Eve alluded to the kind of corporate ISA, the corporate savings market, and whilst that's probably been in place for organisations that have put that almost like a voluntary benefit, the take-up rates are exceptionally low. And I won't even get into high earners and people who are already maxing out their ISA limits. So under a redirection model, within certain limits of floor, employees are allowed to, if you like, trade down their pension, but create a redirection allowance that they can then use to do one of two things. Address perhaps some of their real-life short-term savings issues, building a rainy day fund, maybe having a little more than that £100 in the bank as a fallback. Looking to save for a deposit for a house. It's prevalent in London, but it's prevalent throughout the UK now. Starting a family, the normal financial goals that I guess we're all aware of, that traditionally the employer has said that that's your life outside of work. We provide core benefits and you need to deal with the rest. But against the changing world, what we're starting to see is some employers saying, actually, if there is a line in this relationship, maybe the old line isn't the right one going forward. And the other alternative here is not just to help people with facilitating additional savings, it's potentially looking to help them reduce their debt or pay their debt off quicker, whether that's accelerating student loan debt through overpayment under this model, or whether it's even helping them actually fund and clear some of their debt, particularly where an employer has taken the step to introduce a competitive work-based loan facility. So again, this is an emerging area, but we are starting to see quite a lot of interest from clients. You need a decent enough contribution level, you need to be mindful of auto-enrollment minimum. So, you know, this isn't a panacea, but it's a fundamental shift which we think is supporting the broader financial wellness dialogue. You know, why do employers do it? I'll come to, I guess, the traditional ones. We want to attract and retain talent. We also want to improve our ROI on benefits spend. But often, you know, when our clients are challenged, or our benefits colleagues within our clients are challenged about improving the ROI, it becomes a game of trying to justify how we can get more money, spend on new benefits that employees will value. And I think what's happening in a lot of the financial wellness discussions that we're seeing is we're again having to maybe approach that from a different angle. And the test for a lot of clients, particularly in the current economic environment, is how can we leverage the current benefit spend better. So some of this may be additional add-ons, as Eve said, some tactical additions to help people improve their overall financial wellness. But the biggest debate for a lot of clients is, okay, how far do we go down this road in saying actually our job isn't just to facilitate, it is actually to help support people. We're starting to see again, and as Eve said, this is such a fast-moving market, and she'll come to talk about the future at the end of our session. But what we're starting to see from various sources, and you may be surveying internally your workforce, is that we're starting to get some more empiric data points where we're hearing employees through various surveys or methodology starting to recognise employers that assist them somehow in their broader financial life. And again, this is by our sister company, Thomson's, who you're probably aware of, a large tech provider. And this, again, is employees' self-rating, where they believe their employer has actually taken that step across the line to start supporting them on real-life problems now, not long-term and protection problems like we have in many benefit designs. You know, self-counted people, 1 in 5, 20% of the workforce, are saying, look, where that's actually offered, where my employer really helps me, that actually is a real positive on my whole face-off to work. Productivity is the kind of golden goose here. The finance team always want to know what the hit is on our ROI, and there was some research done by Barclays a few years ago that talked about financial stress potentially having an impact of up to 4% on a business's profit levels. We've tried to correlate that in some recent research we've done, where again, trying to get employees to gauge how they feel about coming to work, how effective they are in the workplace, where they rate themselves as I'm in a really tough place financially versus actually I'm feeling quite good about my finances, more to do, but I've got a good starting point. So again, there's going to be more data, which we know is really important in promoting the benefit dialogues internally within organisations. But some of this, as Eve said, is going to be about tactical changes and about trying stuff and stepping out into perhaps new areas that are outside what we've all done, the consultancy industry and, if you like, the corporate industry, which is kind of doing the same things that we've always done. And a link across on that one, I guess once we've relined our benefit programs, and this journey may take some companies a year, it may take some companies 5 years, or it might be a perpetual journey of stages, is the way we engage employees is going to be really important as well. We've all tried, in this room, some of us have, I guess, many years experience in the industry. Everyone has tried their best to help engage and communicate with the workforce, help empower them, give them the data, the information they need. But as Eve said, without technology, a lot of that, how members respond to that, is based around inertia. And if people are overwhelmed, they don't know where to go to get advice, the default position, and we're all guilty of this, is to do nothing. Yeah. We're also suffering, all of us, from information overload. 50, 100, 150 emails a day through work, social media, personal emails, even when you cut the spam out. There's a lot of stuff that we're hit with, and sometimes cutting through that, seeing the wood for the trees is really important, and we struggle with that daily. But as part of the work that we've been doing, and a lot of this is based around behavioural science in terms of the research we've been doing and partners or academic partners we've been working with, a lot of this is around the overcoming that inertia and using, I guess, behavioural and emotive responses to actually drive action for people. And our mantra is based around these 3 points: data, insight, and action. We've all got a lot of information in our organisations, but are we using it effectively enough? Do we really understand the issues for our employees? We know in the benefits space, particularly where they have a choice or they have an option to do something that isn't part of their core package, they want guidance and they want insights over what the right thing to do is. But information alone, which is, I guess, what we all push out a lot of, isn't enough. So as Eve said right at the beginning, personalisation is becoming increasingly important across the benefits sphere. And I think this emotional piece is, in our opinion, something that is really critical, not just in the pensions or the DC arena, but when we come to think about benefits across the piece. And the last point, and this for us is the most critical one, we can communicate and engage our people as well as we can, and we can do a really great job. But if we don't give them action-oriented information so they then can go and do something, a lot of that kind of falls on stony ground. So An example of what we've developed, and some of you may have seen this before, is effectively a technology-based tool that is significantly personalised. I'm going to let the personalised video speak for itself, and you can see how this would work in practice. Imagine you've gone back to your desk, email in from the benefits team, and you click on the link here.
Hi, John. We at Company PLC appreciate the contribution you have made to our organisation and want to help you plan for your future. This 90-second video is personal. It's about you and your pension. The total contributed to your pension during the last year was over £2,500. This was made up of over £1,500 from Company PLC and over £1,000 from you. Because of tax relief, the actual cost to you was under £900. Your pension fund is now worth over £20,000. Well done. The successful retirement savings plan ensures that you have enough income to maintain your desired standard of living after you stop working. One way to think about this is to compare your current income to your projected income in retirement. Are you on track? Based on your current savings rate, we estimate that you will receive over £800 per month in retirement. This is around £850 less than you currently take home per month. Are you comfortable with this projection? If not, you can boost your annual savings rate by 2% each year until your total personal contribution reaches 12%. While you might not even notice this increase, it will dramatically improve your financial future. Click here to take action now to boost your annual retirement savings.
Okay, so not heavy. 90 seconds is deliberate, and I could probably talk for an hour about exactly the layout, what pops up on screen, the order it comes in, but you can see that the information is really clear, really relevant. And for those of you who do work in the pension sphere, if you just think about notes on statutory money purchase illustrations, the way benefit statements look, it's a fundamentally different approach. If we can do a quick show of hands, if you'd had that turn up in April or July or September each year after your corporate plan had renewed, would you feel that that was something that had given you information you needed that might encourage you to take action? I appreciate it's John or James here. Yeah, how many of you do you think would have clicked on to see what happens next? Surprisingly, and we were really surprised about this, we had about 50% of you in the room clicking on that. And we've run this, and PVs have been in place with a number of clients, but the response rates were far, far higher than we ever expected. And the reasons for that, the imagery we know is important, the emotional hook, the clarity of information that's really most important, and then particularly that link to, so are you with me on this? Do you want to take some action now? The click on that button would either, email through to HR. In an integrated model, it would go straight to a benefits selection page. And this is this point I said at the beginning about overcoming inertia, which is critical. Once you've got someone's attention, they've understood what the message is, you've given them a very clear choice, people taking action, as we've seen through these stats, and this was one client in the technology sector, about 1,200 employees, nearly 76% of them actually clicked through. Yeah. Now, for those of you who do work in the pensions area, I wouldn't even like to put money on how many clients actually would say 75% of our members read the statements that go out to them each year. But I think what's even more important, that having gone through that stage and then considered, nearly 50% of that membership actually signed up. And it may not have been at the 2% in this example, but committed to some additional levels of saving as a result of 90 seconds of communication. Okay? So this example is for pensions, but this methodology, and I think particularly the science piece under it, is a way that we feel is going to be increasingly important across the benefit areas. Overcoming information overload, making sure what people get is personalised, is clear, and then allows them to interpret and take an action if they want to there and then in real time, is critical to that path and truly being able to engage employees better than perhaps we have in the past. So we've looked at the present and the emerging trends. Eve's just going to share a couple of thoughts on where we think the future for FW over the next 12 or 24 months might be going, and then we're going to use the last 15 minutes for some Q&A, and if we can split the room into 4 groups. Just give you a couple of questions to talk about it as groups, just to share any experiences of your organisation or things that you're seeing or looking at within this space.
So last slide-ish. We expect a few things to happen in the financial wellness market. The first thing is that given a number of other streams of activity that are happening, we expect financial wellness to not just continue its current trajectory but increase in importance. The reasons there are pensions adequacy. Is quite a lot of news about pensions at the moment, as there quite often is, but I think given where we are with state pension age increasing, people's understanding about pensions will shortly increase as and when the pensions dashboard gets rolled out. We expect those things to come into focus a bit more. Student debt, we have a reasonably large graduate population now who have significant student debt, and will probably be looking to their employers to try and support them with that to some extent. Housing, we all know what's going on with housing, but it doesn't look any better in the short term. Brexit and the impacts that will have on the workforce also. So we expect the marketplace to continue to evolve. There are new providers moving into this market almost fortnightly. We see a new money management app or whatever being launched very, very often. We think some of those companies, or a large proportion of those companies, probably won't make it in the longer term. We expect to see some market consolidation. And also another thing that's of interest is open banking APIs, which sounds very technical, but essentially in January of next year, all of your banks, building societies, mortgage providers, etc., will have to make available the data, their data, to a third party should you be happy for that data to be shared. That will increase the effectiveness of some of those money management apps, etc., because it means that you can have a holistic view of your finances through a third-party solution. At the moment, they don't quite work because some organisations don't share data or aren't happy to at this point in time, but they're going to be driven by legislation come the 18th of January. And then, finally, I think we're seeing this in lots of parts of employment. The people who work for us expect a consumer-grade experience. Companies like Apple, Amazon, etc., set the standard for what we expect in our external world, and actually that's coming into the internal workplace as well. So what can we do to really deliver best in class in terms of technology platforms, flexible benefits platforms, etc., and personalised videos? You know, those sorts of things, they will be requested and they will be expected from our employees. And finally, we think that we will see a decrease in the amount of tactical solutions. We think within the next 12 months or so, we'll see that some of those approaches haven't worked and haven't delivered value or effectiveness, and that a strategic, holistic, action-orientated approach is really the only way to go, and organisations will realise that. Okay, so we are up to the workshop session, although we'll be going to do Q&As first. Has anybody got any questions they would like to ask one of us or both? Don't be shy.
So that statistic that you...
She's going to ask you to. Sorry.
That statistic that you came up with regards to the amount of people that had less than £100 in emergency savings, I mean, that's quite staggering. I was just wondering how you kind of find that information out. Where does it come from?
I think that's a money advice service fact, actually. So it's fairly, you know, it's not ours. It's one that we believe is actually true, as astonishing as it is.
Hi, do you have like a video or something that we could possibly show to the senior team management to get some support in the funding for this? Because at the moment, everything's all about the employee well-being, but they don't actually look at financial wellness as something that could be important. So they need to have some sort of background to put forward an ROI for that.
Yeah, a video, no, short answer, not at this point in time. I think we've helped a number of organisations with building business cases just to take up to senior leadership, because obviously most of these things do need funding, although some of them potentially don't, and you could look to see actually across your benefit spend, could you spend that benefit, that money better and have more impact within a similar amount. So we've helped with that, but it's more business cases or presentations to the senior board are the way to go in our experience.
And I think one of the challenges is that, one of the challenges is that whilst the broader well-being piece has got a lot of traction, and certainly in the health space, you know, most organisations have been going down that road and are now maybe enhancing that for the last 5, 10 years, even with some organisations. The financial wellness piece is kind of getting bolted on. It's part of well-being, but it's defining that is one of the first stages, I think, for any benefits team in terms of opening up that internal dialogue. And I think what is emergingly clear to us is that there isn't one right solution. You know, it isn't like a doctor's service or something that's very discreet. This is more about that piece of saying as a business, where do we need to be first, rather than perhaps trying to determine a solution that this is what we need to implement and here's the ROI. So again, it's one of those issues we don't think the dialogue is going to go away, and we're seeing a lot of clients hearing noise from the workforce now around some of these areas. But has anyone got any experiences of that type of thing where you're hearing through feedback or surveys from employees, I guess, ask for different types of help?
We done some financial wellbeing, then we've done surveys to help us define which topics to tackle. So we recently did one on getting on the property ladder, either renting or buying, because that was something that appealed to the demographic in the business. So, but in our business, it's FitFlop that I work for. We've defined well-being and then looked at the pillars, so emotional, physical, and then we've listed them out, and financial is one of those. So it's within the overall strategy. So we only had to sell it in once to the senior management, so that financial well-being isn't another thing that they're hearing about. It's already integrated. But we have a small HR team, so we're able to work very closely with our reward person. We only have one, so that there's not a big divide between what we're doing on well-being in general and financial well-being. And then having well-being champions, which means that we've got this one group of people who's helping to get the feedback from within the business, and that's really worked. But we just didn't want to just set off and do the topics we thought were important. We're letting people in the business tell us what they would like to hear.
That's quite progressive, as we have done that already. So I think we are working with organisations who are doing that at the moment, but to already be delivering, that's quite far forward. Any other questions?
Hi, I just had one on flexible benefits. I work in the insurance market, and traditionally that's always been probably a little behind on new initiatives. I think flexible benefits with the demographics of the workforce is definitely something that we need to pick up on. Do you have any recommendations on, firstly, how to initiate that, but any particular providers that are going above and beyond? I suppose you're going to, yeah.
I guess we're slightly conflicted in that we have a flexible benefits platform ourselves. However, what I would say is, in terms of the benefits that you'd put in place, there's so much choice now. I mean, we're seeing, you know, effectively you can incorporate any of the things we've talked about today into your flexible benefits platform. You know, we're going as far as offering kind of your financial version of your health check, even as far as that within a benefits platform. So there's lots of choice. I would suggest you engage with some flexible benefits providers, and the guy behind you can help you as a first start. And then think about your workforce, like the lady over here from FitFlop has been talking about. You know, almost you want to understand the needs of your workforce to try and meet that with the benefits that you select and put in place.